For decades, Russia built its power on raw materials. Oil and gas were the foundation of the budget, geopolitical influence, and the state's strength. Thanks to them, the Kremlin financed its army, subsidized the economy, and pursued its ambitions from Syria to Europe. But this model is increasingly crumbling. Oil fields in western Siberia are on the verge of exhaustion, and the latest drilling operations require costly, often inaccessible technologies. Europe has practically abandoned Russian gas, and the West is cutting Moscow off from the global financial and technological market. In the background, a war continues, consuming hundreds of millions of dollars every day. Sanctions are strangling trade, investment, and Russia's ability to rebuild. The arms industry is increasingly falling behind technologically, and the ruble has ceased to be a stable currency. Russia is not yet on the brink of collapse, but the data are clear. The current model is running out of steam, and alternatives are still nowhere in sight. Is a country that for years lived off raw material exports ready for a future where those raw materials are no longer enough? In this material, we'll show the numbers the Kremlin doesn't want to hear, and which could determine Russia's shape in the coming years. The Russian oil industry is still functioning, but warning signs are becoming clearer. The problem is no longer just the resources themselves, but their availability, quality, and extraction costs. The most productive fields, exploited since the 1980s, are already heavily depleted. New deposits exist, but they are located in hard-to-reach regions of the Arctic or eastern Siberia, where infrastructure is practically non-existent. Moreover, Russian companies no longer have access to the latest horizontal drilling and deepwater extraction technologies. Previously, these were supplied by firms from Europe and North America. Today, those doors are closed. This not only delays new investments, but also reduces the efficiency of existing fields. The effects are visible in the numbers. In May 2025, maritime oil exports fell by 7% month-on-month. This isn't a one-off drop. It's a continuation of a trend that has lasted for many quarters. At the same time, the price of Urals oil remains at about $52 per barrel, well below budgetary expectations. Russia faces a choice: invest massive funds in extracting increasingly difficult deposits or accept increasingly smaller export revenues. But without access to capital, technology, and market confidence, such investment may prove impossible. This is no longer the golden age of Russian oil. It's the beginning of an era where the resource loses its political and financial power.
Russian gas was, for years, one of the most important pillars of Moscow's influence. In 2021, Europe imported about 155 billion cubic meters of gas from Russia, nearly half of its total demand. Gazprom was not only a raw material giant, but also a tool of political pressure. It took just 2 years for this system to collapse. In 2023, gas exports to Europe fell by over 40%, and many countries almost entirely cut off Russian supplies. The Nord Stream pipelines are destroyed or inactive, and new contracts have ceased to exist. At the same time, Gazprom recorded its first loss in decades, over 620 billion rubles. This is not only the effect of sanctions, but also a dramatic drop in demand and the need to sell gas at reduced prices. Moscow is trying to save the situation by redirecting exports to Asia, but it's not working. India and China buy little and pay significantly less. Prices are set not by the Kremlin but by buyers, often with discounts reaching 20 or even 30%. On top of that, Russia lagged behind in developing the liquefied natural gas market. It lacks infrastructure, tankers, ports, and technology. The United States, Qatar, and Australia have taken the global lead. Russia cannot catch up. Not long ago, Gazprom was a symbol of strength. Today, it fights for survival. Can Russia, without European gas buyers, sustain this sector at all?
After the invasion of Ukraine, Russia was subjected to the most extensive economic sanctions in modern history. The West froze about $300 billion of the Russian central bank's reserves. Companies from Europe, Japan, the United States, and South Korea left the country. Overnight, Moscow lost access to capital, technology, and global markets. Exports of goods and services from Russia fell by nearly 10% in a single year. Imports dropped by over 15%. Russia trades mainly with non-Western countries, but this does not compensate for the loss of former markets. Trade with the European Union and the United States has almost vanished. To bypass sanctions, the Kremlin is building a so-called shadow fleet, tankers without official registration, insurance, or tracking, but this increases transport costs and risks. At the same time, buyers in Asia, mainly India and China, demand discounts. In May 2025, the average price of Russian oil was 35% lower than the global average. Isolation is not just an image problem, it's a real technological blockade. Without access to Western components, Russian industry is losing competitiveness. Machinery, microchips, software, all of this is becoming harder to obtain. Russia may try to build alternatives with help from China or Iran, but the scale of the challenge is enormous. Can a country cut off from the global market maintain its economic position, or is this isolation the beginning of a long-term decline? Russia has long been considered one of the world's largest arms exporters. Tanks, planes, missiles. For decades, they reached dozens of countries, from India to Syria. The arms industry was Moscow's pride, and one of the pillars of its international influence. But today, this power is crumbling. Western sanctions after 2022 cut Russia off from modern technologies. Without access to microchips, precision electronics, and optical components, Russian factories cannot produce advanced weaponry. The largest state-owned arms companies, like Rostec, are under immense pressure. The Russian central bank maintains very high interest rates, around 21%, making it increasingly difficult to finance military production. At the same time, the risk of insolvency grows for companies dependent on state contracts. The front often receives outdated weapon systems, tanks from the 1970s, ammunition stored for decades, drones assembled from civilian parts. The Russian army not only fails to keep up with modern conflicts, but is falling behind technologically. To maintain production, Moscow relies on Chinese semiconductors and cheap substitutes. But this doesn't solve the problem. Russian weapons are becoming less competitive, less precise, and less modern. On export markets, they are increasingly losing to Turkish drones or South Korean electronics. Can an army that wants to intimidate the world do so with outdated equipment? Every war comes at a cost, but the war Russia is waging in Ukraine is not just a political and moral reckoning. It's a massive financial burden that, with each month, hits the Russian economy harder. It's estimated that the daily cost of military operations ranges from $500 million to even $1 billion. This is money that previously went to public funds, investments, infrastructure, or social benefits. Today, it's spent on ammunition, logistics, drones, and soldier payments. In the first quarter of 2023, Russia's budget deficit exceeded 2,400 billion rubles. That's more than planned for the entire year. The government was forced to tap into reserves, and the National Wealth Fund, the main financial safety buffer, shrank to about $36 billion by mid-2025. That's half what it was 2 years earlier. Additionally, Ukrainian drone attacks are targeting refineries, reducing Russia's processing capacity by 600,000 barrels per day. This means not only less fuel, but also fewer export revenues. The war was supposed to be quick and victorious. Instead, it has become a black hole, consuming billions and undermining the foundations of the entire economy. How long can the Kremlin finance this conflict? Russia is entering the most difficult moment in its modern economic history. For years, it relied on raw material exports, cheap labor, and arms influence. But today, every one of these pillars is shaking. Oil is no longer profitable, fields are depleting, and prices fall below profitability levels. Gas is losing markets, Europe has turned away, and Asia dictates its own terms. International trade is paralyzed. Russia is cut off from global value chains, forced to improvise and bypass sanctions. The arms industry, once the Kremlin's pride, is becoming a technological relic, deprived of modern components. Add to this the costs of war. It consumes billions daily, drains the budget, and forces the state to make drastic cuts. National reserves are melting away. The economy is shrinking. Investments are disappearing. The future is becoming increasingly uncertain. Will Russia survive this decade as an economic force? Or is it facing long-term stagnation, dependence on stronger partners, and a slow loss of significance? For now, one thing is certain. The country that for decades was a sure player in the global raw materials game must now fight for its own survival.
Thank you for watching this episode. If you found it interesting, please subscribe to the channel and leave a comment with your thoughts. Your support helps us dive deeper into topics like these.